The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. All right, we're going to take a look here at the German DAX like we always do. This is the longer term picture, but frankly, nothing's changed here over the last few days. It did sell off about 80 points, which is not very much in the German DAX, but it is still having a little bit of trouble at the 11,500 level, which is the 78.6 level on the longer term basis. Now, what I've done this morning, I was just chatting with our good friend Bill Meridian of Cycles Research, who will be our guest next week. And he alerted us that there's some cycle timelines that are very important. We have the December 28th, which was yesterday, when we had our good friend Norm Winsky on from Astro Trend, telling us that we also had a Sun-Mercury cycle peaking. He also mentioned the fact that we had this Uranus moving into retrograde motion today. Bill Meridian has pointed out that the market has an annual tendency to top between January 3rd and 7th. That's following the January effect. And if you remember when we talked about the January effect, if it doesn't work, in other words, if the market is lower on January 3rd than it was on December 23rd, that is a negative sign. Also on January 17th, Bill points out that we have a 1, 4, and 10-year cycle tops are supposed to hit. And on February 1st, we have a Jupiter cycle top hitting. And then February in a post-election year has traditionally been the weakest in any of the 48 months of the election year cycle. We saw this, if you'll remember, when we posted this early this week about the election cycle. If we went back to 1981 and take a look, that was the year after President Reagan was elected. You'll notice here that we did do the same thing. We topped in early March of that year, and then we went down 30% into August the 9th of 1982. So that could be very interesting. Now, we only had one down day here, folks. Dow was down 150 points off the top. We got to 19,985. I mean, they were just about putting their hats on the floor of the New York Stock Exchange. And, nothing really happened. So we'll watch this. But the patterns are certainly, with these 1.618 expansions, are telling us that we are at something we think is relatively significant. So, I think being significant is the understatement when you see what's happened since November the 8th, where the market has moved up, pretty much 24%. In like stocks like Goldman Sachs and things like that. So this is a very unusual time that we're watching here, but most people are looking for this really, really critical level. Now, one of the things I wanted to bring to your attention this morning is the fact that if we take a look at the S&P over the past 6 or 7 weeks, we'll take a look at it here. You'll notice that it shows what happened on the night of the election. You see where we went down and made a 1.618 expansion when it was limit down at 2033. By the time you woke up in the morning, we were up on the day, and from there we went substantially higher. We've only had one good correction all during this time, and that was between December 1st and December the 4th, where the market sold off 30 handles. We went from 2213 down to 2180. And so far, we are down almost 30 handles from where in fact, we did hit 30 handles last night on this. So that 2242 is relatively important. But frankly, if you look at this really closely, you'll see the old high that we had here in December that came in at 2213. That'll be a very important level to look at, in my opinion, because old highs and old lows tend to be support and resistance. We've seen this many, many times. This is the type of work that Alan Andrews did, who was a student of Roger Babson, who was one of the great guys of the 1920s and 30s. But this is the area we're watching. If we should get down there to 22.15 is the exact number. It's down another 30 handles, but we're only down, just a very, very short spot from where we made the highs. The thing is that we did hit these large 1.618 numbers, which I think are, very, very important, and that to me is tantamount to, telling us that we need to be really, really important. If we take a look quickly here, I'm going to run over to the Hang Seng here a little bit just to show you, because this is something we were looking at yesterday. On Monday, Tuesday, the first day trading Tuesday, you'll notice that we hit that exact 1.27 expansion at 21,500. We've now rallied just about 300 points off the bottom there. And this means that this is a significant bottom. Anything below 21,500 in the Hang Seng is going to take this down to the 20,000 level, because that's the larger pattern that we have on the weekly basis that we've focused on the newsletter, several times over the past, oh my gosh, I think I've been doing this for the past, it's been about 3 months now that we've been focusing on that because we have so many friends in the Hong Kong area, and we like to take a quick look at that. Now, let's just look here at the overall stock market here, folks. This is a 30-minute chart here on the New York Stock Exchange Index. If you'll notice here that the period between the 15th and the 20th, that 5-day rally, this is a totally different chart than what you're looking at when you're watching the S&P or the Dow, because this is the real market. These are all cap-weighted stocks, the best stocks in the world, and there's several thousand of them. So this is the real market. The S&P is only 500 stocks. The Dow is only 30, and they're price-weighted. But if you look at the high we made back on December 13th, when we made that 3 drive to a top pattern, we came down, we rallied up to a 50% retracement with a perfect ABCD pattern from the 14th of December until the 20th, and then after the 20th, we've started to head down. You'll notice yesterday's rally, which was started off with the banking stocks again. We gapped up to the 78% retracement of the high on the 20th. And then, of course, we started to go lower, and the price target on this pattern tells us that we are going to go lower. And this is a 30-minute chart, so don't be expecting too much. We've only got one other trading day, left, and that's going to be a very, very slow day, I would believe, being the last day of the year. So we'll keep this in mind very, very closely, and see that Gator, you're absolutely correct. The ES did a 135 on a 4-hour chart. It was just spot on, perfect, and this is very good. I'm really happy about that, because we try to take advantage of those things. So we'll watch it, very, very closely. We'll watch, of course, we watch everything closely, but especially, the E-mini trades that you folks watch in here. Right? The Euro's by far the best thing to trade. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at the Nikkei Dow coming out of Japan. As you can see, we made that 78.6% retracement about 3 days ago. What's interesting about this is that we've now taken out the lows of the last several weeks in the Japanese market already. It was down another 1.5% last night. So that confirms that this 78% retracement was very, very important. In addition to that, if you'll notice the red line that is marked at the 1.618 level, which is extremely important, that also hit it at the exact same spot, which is with that 19,600 and change, and now I believe we're at 19,200, I believe, or 100 in the Nikkei. So this has definitely confirmed this pattern. Now, it will fail if we get back above 19,700, but right now it is certainly starting to look like this pattern is in vogue, at least for a shorter term basis. And as we've pointed out with the work of Bill Meridian and Norm Winsky, that we've had some really interesting things happen. We'll try to have Shane Smolian on also, because he's getting busier and busier, because when you're good, you get busy. So we'll try to have Shane on next week if we also will do that. And then we're going to have Arch Crawford on probably the second week of January to talk to us about the Chinese New Year, which is the year of the rooster, which is, related to fire. And so we'll watch this very, very closely, because there's been some really historical things happening with that that was brought to our attention by one of our good friends in Las Vegas, Tom Beck. And so we'll watch some of these other things just from an educational purpose. Sometimes they fit in with market action, other times they don't, but they're very, very interesting. Okay, we had a question about a stock that we posted yesterday, and this has been quite interesting because we had one heck of a move in it. This is NVIDIA. We were talking about this yesterday because of the gap ups that this stock had been looking at. We posted the weekly charts over the past year. You can see the ABCD pattern that measured to the 122 level. The stock hit a high, believe it or not, at 121.78, and then reversed. It's already dropped 10% from the high. It hit 105 earlier this morning. So this is something, and it is probably a very, very significant high here in this stock because of that shooting star candle, which is the most bearish of all the candles that we have in candlestick charting. So you want to watch this one because for two reasons. One, if you get a nice small pattern back, in an ABCD format, that would give you a really good entry point from the short side. And this stock has options with it, so you could buy a put. Probably, you could buy something like a 90 put for almost nothing. And if this stock is turned, it's going to drop like a rock. So we'll be watching this one closely. I think the best way to, if you're going to do the options, is to listen to Tom's show that we have for Think or Swim here at TFNN. They got some of the best option ideas that you have. And also, Steve Rhodes does a really good job with options too. So both of those folks do a pretty good job, looking at that. So we'll keep an eye on that very, very closely. We want to talk just a little bit here about the crude oil market, because I still think, we're getting ready for a pretty significant breakout here in crude. If we can get this thing above the 95. Whoa, we're going back in history a little too far. If we'll put this chart up, we'll take a quick look at it here on the daily chart here of crude oil. And you'll see that we've had a lot of resistance here at this 55.20 level. That's giving us a little bit of a problem. We need to close this strongly above the 55 level. This is the weekly chart, as you can see. But if we can get it above that, we've got a pretty good chance. Now, we came very, very close yesterday because we were hovering really close to that level. As you'll see, we were looking at this as this was happening yesterday, and we got right up to that level again, and then we backed off another $1 a barrel. So we're still approaching it. The good part is it hasn't broken badly from the high. But if we can get this market above this 55.80 level, then it's got a really good chance of moving to the upside. I think that the most important thing to learn from this chart, folks, is what happened on December the 9th. If you remember, they had that meeting of the non-OPEC group, and the market opened 5% higher. We went from 53 to 56 that Sunday night, and then it started to fail. And we were talking about this on the air that next day, is because the Canadian dollar, which has a very high correlation to the crude oil, was not confirming that this was a breakout in crude oil, and that is in fact what has happened. So this is an important chart to remember, that when you have these breakouts, many of these breakouts, when they gap up like this, are exhaustion moves, and you want to be careful. Now, if it continued to go higher, that's a totally different thing, but this had several factors in it to tell you that maybe it was not going to do that. So those are just charting things that you want to watch as you go through, looking at some of these things. As we look at another component of the crude oil complex, we'll take a quick look here at gasoline, and you'll notice here that the gasoline, which is the XRB contract, we've taken out the highs of May. That's the equivalent of $59 in the crude oil, but we've not been able to do that. If you notice that time period there where we had that big spike up and then the big drop in November, that is when they had that Alabama gas explosion, and there was, rumor here again, was one of those, sell the news type thing, is that there was going to be very little gasoline across the east because of the explosion at this gas plant in Alabama. And as you can see, the prices went from $1.65 to $1.26 in a matter of 10 trading days, and then look what happened. The market goes right back up again. So, this is why, the news is pretty tough sometimes, folks, because the news follows the trend, and that's exactly what happened here. So the patterns are the thing that, you try to, to hang your hat on. You'll notice that we came down to that 127 level 3 times. We did it in July, did it in August, and we did it again in November. And each time we got there, we couldn't get more than a half a point below the 127 level. That's a sign of very strong support. So this market is now getting up to an area. We're almost at a 1.27 expansion of that whole move. So this move is getting pretty much to be ready to be sold and have a nice correction coming up, and we'll see see that that's going on. Yes, Gator, you're right. Those 135 patterns on those 4-hour charts, they're finally really doing great. And those of you that took the class, I get emails from you all the time. That was real. I got another one I think that'll be really good sometime in December. It's an astro pattern that is really quite cool, and we're going to try to do that for TFNN sometime early next year. Yes, the bonds are finally having a good bottom in here. I think if we can get them to close above 151, the bonds, we're trading it around right near that 150 level right now. We'd have a chance to see, the move get up to where we think it's going to go, which is around that 156, 157. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look at this economic index that we get from the Gallup poll. As you can see with this chart, we're looking at a 3 drive to a top pattern. This goes back well over 7 years, so you can see the bottom that we had in 2008. Each of the cycles is, very, very reminiscent of what happens to stock prices. We've never had the index this high before. This is an all-time record, even succeeding 2000, and as you can see, we shattered 2007. So watch this very, very closely. Now let's take a look here at the gold market, because we're still looking for a possibility in gold, to have a pretty good rally out of here. You can see over the last 2 weeks, we went down and we hit that 1125 level. 1117 is the exact 786 on the long-term weekly basis. Remember, folks, that we bottomed in December, late December of last year. And then we had a $330 rally off the bottom when we got to 1384, which was a 382 off of the high of 1932 per ounce back in 2011, and it was also 78% of the previous year's high. That's what caused the sell-off, we believe, and now we're coming down, testing it one more time. We're doing the same thing with silver, and we're also doing the same thing with the platinum, with silver and platinum being a little bit stronger than the gold market. The gold market has been affected a great deal by what's happened in India, because they've disallowed, the ownership of gold, and so that makes it difficult. As you can see from this ABCD pattern here, we really need to get the gold above the 1167 level, taking out the highs of mid-December around the 14th. That would really get it a pretty good move. That would be $40-some off the bottom, which would alert to some people that that's possibility of a move. Now, if you're looking to buy the gold, what I would be watching is if we can pull back one more time down to around the 1132 level, and there's a possibility of that, because the harmonic number on the gold is 17 and 36. That would take us right down to that level to watch it. So watch that very, very closely, and we'll see how the market's going to react to some of these things that we're looking at today. Today we're up a little bit after the big move. Well, it wasn't a big move down. The Dow was down 112 points. It was up down 150 from its high. So that was just the first correction, possibly. So the key numbers to watch today, of course, I believe, are 2259, which is that old breakout level to the downside. That should offer some strong resistance. And the second part, it would be the 20 on the downside, which would be down quite a bit. It would be down 30 handles, which means the Dow would have to be down more than 200 points. I don't believe you're going to get that type of a move with the 2 days to go in the year. We could certainly see it right after the first of the year, but not on this time, because there's the volume's light, so you could certainly do it. I'm just saying it's my opinion, and we all know what opinions cost, folks. Everybody has one, and it usually smells. So anyway, that's my opinion of what I think is happening in the S&P. The whole thing I'm basing it on, folks, are all of these big 1.618 numbers that we hit over these past week or so, one after another, from the Dow Jones to the NASDAQ to the S&P 500 to the Russell 2000, all of them, coming in at the same time. And now we have some of these big cycles that are, showing up, which we've seen from Bill Meridian and also from Norm Winsky, and Shane also sends them to me. I don't post them all the time, but we'll have him on and talk about it too. And also, Shane has been, sending me some information about the Fed, and the Fed is really, they've really scaled back their operations. I guess they don't have to with the market going up by itself. So they've scaled back their quantitative easing, and that could be, something that comes in quite a bit. If you look at what's happened across the pond with the Hang Seng, and you look at what's happening with China, these stock markets do not look very bullish. I mean, they are so bearish, it's just unbelievable. We could hardly rally at all. The Nikkei was able to rally to the 78% retracement, but gave it all back in a matter of a couple of days. Well, not all of it back, but we're trading near 3-week lows. So this is telling us that the market on an overall basis doesn't look that good. And of course, with the emerging markets is the same thing, that you don't have that same type of move that we're watching. Okay, let's switch our operation over to the dollar index, because we've talked about the fact that there could be a significant spot here in the dollar index at this 103.80 level. We're trading at the 102.60 level now. We come off about 100 pips. We've been here for 2 weeks, unable to get above the 1.618 level of March or the 1.27 level of last December. The good part is, if you're really bullish this, we're only able to make a 38% retracement into December the 1st after that big move we had on election night. As you can see there, we had that spike down right at a 61% retracement. Unfortunately, unless you're up in the middle of the night, you wouldn't have seen this until the next day. And you'll notice that the market did complete that ABCD pattern up at the top. The $64 question, and believe me, it is a really big $64 question, is whether the euro is going to be able to come down and to make this level of the 100 or par level. Right now we're trading about where it shows here, 104.80. We went down again yesterday. We dropped 120 pips right into a 78% retracement level, and then the market was able to turn and move to the upside one more time. So it's really trying to hold this level at the 104 level. Whether it's going to continue to do that or not on a longer term basis is going to be a little bit harder to see, but we'll be able to take a look at that as we go through. Now, someone asked me by email yesterday, what was the trigger mechanism for the stock market to finally, break down, yesterday. Folks, I really don't know. All I know are the patterns that I look at, but the one thing that I do watch is I watch the, relationships of 1.618. And if you put up the Dow Jones here on a 15-minute chart, you'll notice that where that little marking is, where it says, notice the break below the 1.618 expansion, that happened at 19,840. And once we broke through that, we immediately broke 80 points. That put us down about 150 points on the day. That stopped right at the 1.27 of the swing from way back on December the 19th. So all of that is telling us that we probably hit something pretty significant at that point, and we should get a little bit of a rally. Now, if the market rallies like it's done before, it shouldn't rally any more than about 50 or 60 Dow points, well, 70 Dow points, because that's the harmonic number in the Dow. So watch the Dow to see if it's going to rally 70 points. So 70 points from 19,770 is going to take you to 18,000, let's try it again, 19,840. And guess what that is, folks? That's right at that breakout that we came down from at that 1.618. So watch 19,830 to 840 in the Dow, because that would give you a pretty good indication that that should be the end of the move that we're going to be looking at here. So 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, the next chart we want to take a look at here is the, I want to get back to the euro because I think this is going to be an interesting one to look at. I've posted the chart to show you what the resistance level should be in the Dow Jones. That would come in at the 19,830 to 840 level in the futures. That equivalent in the S&P is at the 2253 level. So that's why that is important. But if we switch over here to the euro again, because this is what's really trying to look at here, you'll notice here over the past 10 days, we've had these pretty significant moves here in the euro. We made our low down there at 103.50 back on the 20th. Then we had a really strong 150 pip rally. That was the harmonic number, of course, in the daily euro chart. Let's say that again on the 30-minute chart. Again, you'll notice that we completed the same move that we did between the 18th and the 20th. We completed that same move yesterday. That was down a little over 100 pips from the high. And then last night we got right back up to the 104.80 level. As you can see here, anything above the 104.90 level is going to take us up to the 105.20 level. That also will be a 150 pip move off the bottom. And then you would expect another correction to the downside because this market is still going down until we can get it above the 107 level. That means that dollar index is going to have to get back below the 101 level. So that would be very, very difficult for that to do in a matter of a few days. But remember, folks, coming into the new year, the foreign exchange markets have a tendency to start big moves. I don't know whether that's just because the people are balancing their books or getting ready for the next year. I'm not sure, but the foreign currency markets are headquartered in London. It's not headquartered in New York like some people think. The London market is much, much bigger than the foreign exchange market in the United States. And so you'll keep an eye closely on that. We've got some big things happening. Another market that is very, very close to a potential double top, and that is the Canadian dollar. versus the U.S. dollar here. If you notice this, we did get back to that 136 level yesterday. We hit 135.92, matching the old high that we made back in November. We went above it by about 3 pips and immediately dropped 100 pips. So that's the first sign that there could be something happening really dramatically here in the Canadian versus the U.S. dollar. But as I mentioned, we are coming in, to the year end, and there's going to be some pretty good volatility starting the year out, much like we had last year in the stock market and the gold market. If you remember, stocks topped around the 3rd of January, came down into the 16th of February. Gold had bottomed around December the 28th and had a huge move up, and that was another one that looked, really, really interesting, on the long side. Now, we should switch over here to the bond market, and we will take a look at that here in just a second. Unfortunately, I have lost that chart, so we're not going to do the bonds, but the bonds need to get above the 151 level. That will tell you that you'll have a pretty good move, potentially up into the area of the target that we're looking for is around 155 in the Treasury bonds. And that is a bear market rally, folks. The interest rates are going to go higher. But as we've said before, the news follows the trend, and we've certainly been going had higher interest rates since the market topped in July. Just because the Federal Reserve has been behind the curve doesn't mean a whole lot. So keep that in mind also. Now, yesterday I was listening to, I believe it was Steve Rhodes, and maybe it was Basil. I don't remember exactly who it was. Just give me a second here. And someone's asked me to do the 10-year notes. I'll try to do that when we come up to the next break. I know I can do it. Whether I can do it in time or not remains to be seen. But let's just switch over here and take a look at the VIX index on a long-term chart. You can see we've had only a few instances of fear since the big fear back in 2008 when we had the what we call the too big to fail situation. So we'll see whether that's going to be anything. Anyway, I do believe these notes have made some type of bottom. Let's get back to this VIX index. As you can see, we had that 135 pattern that we talked about in the special show we did earlier this year. Well, later this year. It was done in October, I guess. But as you'll see here, that we are down near multi-year lows in the VIX index. And believe me, given all the things that have happened, I believe that this would be good insurance policy for someone to to get looking at as you're watching these markets unfold, because we don't see moves like this like we had in the market very often. It's an outlier event, folks. It was predicated on a big surprise in what was happening with interest rates, and believe me, that doesn't mean it's not going to stop. But what I can say is that you'll be looking at something that could be just as dramatic to the downside. That would be a big surprise. What would cause it? God only knows, and she doesn't trade. So just be prepared, because markets that go straight up have a tendency to go straight down. That's the bottom line. That's what we're really watching as we look through here. Let's take a quick look here. We're going to do first. We're going to take a look at this on the weekly basis, because that's the one that this is the one that we're for the notes. Give me about 10 seconds, and we'll have this ready for you. And there we go. Okay, we should be ready to go right now. All I got to do is to find it. And where did I put it? I put it right here. Oh, here it is. There we go. Here's our note chart for our good friend Marshall out of Oregon. Okay, let's put this up. I love Oregon. Okay, there we go. You'll see that these notes hit the 61% retracement of the low from 2009. That means we should have a pretty good rally. Where should we rally to? We should rally up into those old lows, which is around 126. This would be equivalent to 155 in the bonds. So watch that very, very closely. Remember that we've had a tremendous move here in the markets, in bonds and stocks here in the last 5 weeks because of the election, folks. If you remember, look what's happened in the money moving. We've had $3 trillion move between the bond markets to the stock markets. They're leaving the bond market and they're going into the stock market. And so anyway, just keep that in mind too. And remember that the Gallup poll where we're looking at the confidence index is very, very high. Well, these things are patterns, so you want to be able to, to see what's going on with that, and we'll see what's going on. Anyway, if you are in that TLT, which we are, it started to work. So whether it's going to continue or not, we'll have to wait and see. But this is one of the things that we are looking in this bond market is for a rally, and that's all it is. How much it's going to be remains to be seen, but we'll be watching it on a daily basis, of course, to see if this is going to be the same thing. But the main thing is that we got all these numbers hitting on the 1.618 level, plus we're having a lot of cycle stuff based on Astro and just regular cycle things too, along with these outlier events. So watch these closely, and you will probably be able to protect yourself somewhat if, in fact, this market ever does have a 1% correction. God forbid. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to have a little lighter moment here at TFNN. Last night was scallop and lobster night here at the house with the family, and so we were barbecuing some really lovely scallops that we got at Costco, along with a couple of lobster. And we have Sarah has hummingbirds in the garden, and the little hummingbirds were all around looking at everything, and so we were out looking at them. So I carried the scallops into the dining room, and the little ones were there, the 3 and the 5-year-old, and I went back out to check the lobster and look at the hummingbirds, and about 15 minutes later we came in when the lobster was there, and 2 pounds of scallops had disappeared. I don't know how a 3-year-old and a 5-year-old can eat 2 pounds of scallops, but they did. And then they also were still hungry, so they wanted some lobster. So be careful if you have 3 and 5-year-olds around, folks. They have a tendency to eat a lot. Anyway, this is it's very interesting that they could do it, because I know they love seafood, but that was really that was really an amazing feat to see him go through it. I guess they're eating it like popcorn. No, the hummingbirds didn't. Hummingbirds, if you go to Google and hit hummingbirds, they're incredible. They're not supposed to be able to fly, but their heart beats at 400 times a minute. They sleep. They go into a pretty much zero heartbeat when the sun goes down. They wake when the sun comes up. They have an average lifespan of about 11 years, and we've got a whole bunch of them here, and they're really, really beautiful little birds. And but anyway, that's it. Let's get back to the markets, folks. We got one more day to go. Keep in mind these 1.618 levels that we've hit. If we get below the 2239 level in the S&P, that pretty much tells us that we're going to head down towards 2213. We have a lower trading volume, of course, today and tomorrow. I'm not even sure. I think we have even shorter hours. No, we don't have shorter hours tomorrow because of the year end. So I'm pretty sure we have a full day at the stock exchange. Also, keep an eye on that crude at $55 a barrel. I think we're going to clear it, but we'll see. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.